Imagine waking up one morning and discovering that a single digital coin is connected to a valuation of $96 million. $96 million. A number so enormous that most people could never imagine earning that kind of money in their entire lifetime. But here's the real question. Was this coin actually worth $96 million? Or was that massive number creating an illusion of wealth that didn't really exist? This is the story of a mysterious digital coin that suddenly attracted the attention of investors, traders, and thousands of curious people around the world. At first, almost nobody knew about it. There was a small community, a few social media posts, some optimistic investors, and a growing belief that this unknown cryptocurrency could become the next major success story. Most people ignored it, but then something changed. The price started rising, first slowly, then faster, and eventually the numbers appearing on trading screens started attracting attention. The valuation climbed higher and higher until one number became impossible to ignore: $96 million. Suddenly, everyone wanted to know the same things. Where could they buy it? How high could it go? Could this become the next Bitcoin? And most importantly, could an ordinary person become rich by getting in early? This was the moment when excitement began taking control. People saw the number on their screens and started imagining it as real wealth. But there was one enormous problem. Market capitalization is not the same thing as cash. Imagine a cryptocurrency with a large supply. If a relatively small amount of that coin trades at a certain price, that price can be multiplied by the number of coins in circulation, producing a market capitalization of tens of millions of dollars. But that doesn't mean someone has $96 million sitting inside a bank account. It doesn't mean $96 million of cash has entered the project, and it certainly doesn't mean every holder could sell their coins for the displayed price. That's where the mystery becomes interesting. The $96 million valuation may have been real as a market cap calculation, but what did that number actually represent? To understand that, investigators began looking at the blockchain. Unlike traditional financial systems, many cryptocurrency transactions can be publicly viewed. You can see wallet addresses, transactions, and tokens moving from one wallet to another. But there's a major limitation. A blockchain address doesn't automatically tell you who controls it. Suddenly, the investigation became much more complicated. Large wallets began attracting attention. Some people believed they belonged to early investors, while others suspected that a relatively small number of holders controlled a significant portion of the supply. And then came the speculation. Was the market being manipulated? Was the price being pushed higher by a small group of traders? Or was this simply what happens when a new digital asset suddenly receives enormous attention? Nobody seemed to have the complete answer. Then came the turning point. The buying pressure began slowing down, new investors became harder to find, and the same market that had pushed the valuation toward $96 million suddenly began moving in the opposite direction. People started selling. As selling increased, the price began falling, and when the price fell, the $96 million valuation began disappearing. The number that had once looked like an incredible success story was suddenly shrinking. And this is where the story reveals its most important lesson. Paper wealth and liquid wealth are not the same thing. If a cryptocurrency displays a market capitalization of $96 million, that does not automatically mean its owners can walk away with $96 million in cash. The real questions are much more complicated. How much liquidity is actually available? How much trading volume exists? How many genuine buyers are willing to purchase the asset? And what happens to the price when someone tries to sell a large amount? These questions separate a genuinely liquid market from a giant number displayed on a screen. And that's why the story of the $96 million coin is bigger than cryptocurrency. It's a story about human psychology, greed, fear, hope, and the powerful dream that one small investment could completely change someone's life. Because when people see a number climbing rapidly, they don't always see risk. They see opportunity. They imagine the future. They imagine wealth. They imagine freedom. But markets don't care about dreams. Prices can rise, prices can fall, and sometimes the biggest illusion isn't the asset itself. It's the belief that the number on the screen automatically belongs to you. So the next time you see a cryptocurrency valued at $96 million, stop for a moment and ask yourself, how much of that value is actually liquid? Who controls the supply? Who is buying? Who is selling? And perhaps the most important question, What happens if everyone tries to sell at the same time? Because behind every giant number, there is a story. And sometimes, the number is only the beginning of the mystery. $96 million. One coin, one unbelievable valuation, and one question at the heart of the entire story. Was it really worth $96 million? Or did the world simply believe it was?